Hey guys, I hope you're well and welcome to this special update here on TradeCaptain.com. We are live on Twitter and we are live on YouTube. What we're going to cover today is just a quick overview of the crypto markets. We're going to look a bit deeper and not just talk about Bitcoin, but also talk about the various altcoins that dominate people's minds and trading. But before we do that, as always, I need to stress that trading financial markets, unfortunately, is high risk, and there's a genuine risk that we lose all of our invested money. For more on this, on the risk disclaimer, there's more on this in the very bottom here on TradeCaptain.com. And who am I? Well, my name is Alejandro Zambrano, and I'm the Chief Market Analyst with TradeCaptain.com. And before that, I used to work for the website dailyfx.com. Effectively, I've been in the industry since 2005, and I started to trade Forex in 2006, and learned quite a bit since then. Now, you might say, well, what does that have to do with anything with trading crypto markets? Well, crypto market trading, because it's something that is in essence has more to do with the psychological aspects and of investing in trading rather than macro fundamentals. A good example of that is, for example, Aetherium. So this is Ethereum's price, and it had a proper roller coaster event. Here's data from 2016 when the market was trading at $11 per coin, and then it went all the way up to pretty much 1,400, and now it's back at 200. This is a log chart. If I get rid of the log chart, this is the way it looks like. So a dramatic rise and a dramatic fall. And over this period of time, the Ethereum network, as for now, for example, hardly has more than 9 to maybe 12,000 users per day of its dApps, which are application run on the Ethereum network. So an idea that is supposed to revolutionize the world have farly only affected the daily lives of maybe 12,000 people across the world, even though millions of people actually own Ethereum coins. And as an effect of the lack of fundamentals driving price, it's all about technical analysis and using that really to trade the markets. In my own case, I made some decent returns. I actually joined the party very, very late, pretty much November, December last year. But by the end of the year, my portfolio, which is more than just crypto, gained a total of about 100 and I think it was 125%, whereas the crypto leg itself was even higher than that. And managed to trade the upside. Did of course try to buy Bitcoin and many of the other coins as the market declined in January, and I even made a bit of money here on the April rise, but I lost a bit here and then made money here in the April rise. And since then, since we started to have these declines, I have in essence not touched the markets because the technical analysis is not telling us to buy. Now, let's begin with Bitcoin, which is following a very interesting pattern, and this is a descending triangle. You can construct a descending triangle by when you see this series of lower and lower highs, and it should usually be matched by a nice sort of horizontal line. And if we take this level here, which is the low from February, then you can say that it intersects with the June low, and then you have the August low. Now, what is interesting here is that the market obviously overshot here already a bit without having a strong move, and then you have this as well sort of touching the level. So there's not like an exact science, but roughly around this area, around 5,786, I would argue that there's a lot of people that have stop loss orders, which means that they're willing to hold Bitcoin as long as you trade above that level. But as soon as you trade below this level, they're going to start to sell. And the pattern itself, if you follow it strictly from the sort of textbook example, then you're supposed to take the base, which is this section here. And this suggests a 50% decline. Now, it's not that often, especially a big pattern like this, that we actually get that full move. So I prefer grabbing pretty much the midpoint of the pattern. And this, from that perspective, this market suggests a 42% decline. You can see here I'm talking about percentages instead of dollar moves. In any other markets, I would usually just talk about the dollar change, which is a potential decline of 4,183. But that would probably be a bit extreme here and wouldn't make too much sense, because 5,000, because what we do here, the difference here is subtracted from the potential breakout level. And if indeed we were going for the dollar value, then it actually projects that Bitcoin should be trading at 1,596, which I think is a little bit extreme. And this is a 72% decline, which is different to this, which is pretty much a 42% decline. So I'm actually rather work with the less aggressive target, because if you sort of work with very aggressive targets, you will, in essence, very seldom sort of reach your targets. And this projects a potential decline down to more or less about 3,400. You may say, well, this is nonsense. Well, let me show you an example where it recently worked out very good. And this is Litecoin. So here's Litecoin. And here as well, you had the same pattern. You had low here in February, so similar low to the one you saw in Bitcoin. And then you had the March, April low, which is the same as you saw in Bitcoin. Here, the line, you can see that the market bounced nicely from the May 29th level here. And so this is perfect. It's only this one that overshoots a bit. And then you have this trend line, you add it like that. And this is again a descending trend line. And this is not a logarithmic chart. And if I take the difference here, then this is a $100 decline, or a 48% decline. Again, because of the way these markets change, I don't think it makes too much sense to actually anticipate a 100% decline, because the break here would have suggested that the market is going to go down to $8, which I don't think makes sense. But perfectly fine for the market to lose 48%. So if you take from the breakout level, you can see that the market declined with, actually in total it declined with 54%, so more than projected. And so this pattern, what we've seen here, could potentially be replicated in Bitcoin. And to trade successfully, we need to see a break to this level. A daily close is usually a good measure, or expectations that we will have a daily close below support. And the benefit of this is that when you have those sort of moves, you tend to have a great, it tends to work out fine. It tends to be, when you have this sort of break, you could potentially, as you see here, a very, very strong decline, which is really important. Now, every time I take a position on, I always look at my potential reward versus my potential risk. This is what we call the risk-reward ratio. And here, one could have sold on the break here. Maybe you would have sold at the end of the day, which would have meant selling at 106. The stop loss would have been just above the daily high, which would have been an $11 risk. So selling here and risking $11 per coin. Then of course, how many coins one would like to sell depends on the portfolio you're managing. So $11 risk, and then the whole market declined, and it declined with $59. So if we just bring out a simple calculator and take 59 divided by 11, now that's 5.36 times the risk. And this is important because trading with technical analysis is not like a holy grail. In fact, most of the time you will have a losing trade. So imagine you make £1 when you win and you lose £1 when you lose. Well, if that is the risk-reward ratio, or the average gain versus the average loss in your trading, then you're forced to be right more than 50% of the time to make any money. But trading financial markets, on the onset, you're usually wrong most of the time. It's just the way it works. I guess purely mathematically, the prices can only go up and they can only go down, right? So your sort of default outcome should be about 50%. We are at 50% of the time. But if you look at how people actually trade and how the markets actually behave and how we behave with the market, it's quite normal to be right slightly less than 50% of the time. Now, if we're right slightly less than 50% of the time, what does that mean then for this relationship profit versus losses? Well, we need to be right more than, we need to make more money when we win. Otherwise, we're not going to be profitable. To give you an idea, imagine that we are playing a game. Now, this game is a game of just tossing coins. So we toss a coin and we have a 50% chance of winning, heads or tails, right? If it's a normal coin, if you flip it 100 times, so maybe 1,000 times, say you flip it 1,000 times, well, you will probably have maybe 500 winners or heads and 500 tails. Of course, if you just flip the coin 2 times, it could be different ratios, but in the long run, if it's a genuine and good coin, it will be 50-50. Now, what if I told you, well, you know, play this game, and every time you win £2, and every time you lose £1? Well, that would be a good game, because in the long run, you know you're gonna win and you're gonna lose with the same proportions, but because you're winning more money every time you win, you will technically take 2 steps forwards and then 1 step back. 2 steps forward, 1 step back, and then 2 steps forward, 1 step back. Of course, because in the short term, you know, you can have 5 losses in a row. Well, technically, you can have 5 steps backwards, I guess, and then you have a winner. So you take 2 steps forward, and then maybe you have a loser, but then eventually maybe you have a winning streak, and you know you can push to the upside. In the long run, though, the results are going to look like this on average. But in the short term, you can have more losses than winners. And it can also be the other way around. But because you're looking to make more money every time you win versus every time you lose, makes this pattern here, the descending trend line, and especially when traded on a daily chart like this, interesting. And that is also what makes Bitcoin interesting. That on a break to the low here, we could potentially move to the downside. Why? Because people want to protect whatever little profit they have left or whatever profit they have left. At the same time, you're going to see traders, speculators probably try to sell Bitcoin. So what needs to happen then for this not to play out? Well, this whole pattern needs to be void. So the market needs to trade above the September high. So if we trade above here, then we're not going to be in this sort of wedge or downward sloping triangle anymore. So a break to the high here could potentially eliminate that, and we go up, but then potentially down again, and then potentially higher. So that's definitely feasible. In fact, as long as you trade above this high level here, there's no real reason to worry about it. However, though, if you focus on things like Ethereum, so this is Ethereum. Ethereum had, let's see if I can, just gonna see if we have, yes, we have enough data here. If you look here at Ethereum, and I'm gonna put on a log chart, you can see here that Ethereum itself is in a very strong downtrend. Ethereum is the second biggest coin in the market right now, and the market is bouncing higher as you have people finding value in Ethereum at these levels. But it's technically still in a downtrend, which means that, okay, it might go a little bit higher, but as long as it's trade below that level, we could potentially move lower. And if I'm right in that assessment, then if we have a resumption of Ethereum moving to the downside, and as well you see similar here with further weakness in Ripple, so this is Ripple's chart. So if Ripple moves up a bit and then moves lower, then it's going to increase the likelihood of Bitcoin coming under pressure. On the other hand, if these markets break higher, then at that point most likely, and here as well, if Ethereum manages to trade above 303, then it's more likely, I think, that Bitcoin is going to be able to withstand the pressure, take out the high, and then potentially trade higher. So that's sort of the big picture trend on Bitcoin. In the case of Ethereum, as I just mentioned, the trend is clearly bearish below 303. And we could easily bounce maybe up to 236 or something like that, maybe a little bit higher, 253. How can we sort of figure out how high we can trade? Well, typically we can just take a Fibonacci tool like that. So from the highest level to the lowest level, this measures okay, we're back. Sorry about the issue. I had some issues with the audio there. Yes, so with Ripple here, we're dealing with a downtrend still. Now you have what looks to be a double bottom, but a double bottom is not a double bottom until we actually take out the high. And with that in mind, I think it's fair to assume that this will continue to remain under pressure. And I'm not selling myself here into this market because we're so close to the lows. I'd rather just wait for Bitcoin to break. But I think here as we move up to the prior highs, people that wanted to book profits are probably going to try to do that. And it's only on the break to 37.64 that I think the market could head to the downside. So it can head to the upside. Now this is Bitcoin Cash, and we're going to finish off with this market. So Bitcoin Cash here, I wouldn't necessarily call this an ascending triangle. This is more of some sort of a Sorry about that. We're having issues with the batteries. I think we're gonna wrap things up. I was saying here, it's not necessarily probably a good idea to see this as some sort of a triangle because it's very difficult to sort of figure out exactly what this is, what we're looking at. But we can still sort of use a bit of the information here. And I wouldn't necessarily say we're going to trade it down with 64%, but movements we've seen in the past tends to be replicated. And on the back of this, on the break here, I would argue that we could potentially see another 64% decline, which, if that will play out, would take us down pretty much to the levels here seen in August 2017. Now again, I wouldn't really target those levels, rather maybe the next, clearly the next major low is here, which is the October 17th low. So I think that could be a possible target. And I think here that clearly, as long as you trade below this high, we're definitely dealing with a downtrend. And again, we don't even have to have Fibonacci here. You can clearly see this is prior support, and this is around the 400, say 500 level. So I do suspect that maybe around these levels, again, traders will be more happy to sell because a lot of people bought here hoping for it to go up, which it didn't. So when we go up here, people will probably start to sell again. And for now, at least, the trend will remain bearish below 665. Okay, so I provided you guys with a quick overview of the markets. We talked a little bit about an important pattern, which is the descending triangle. We also talked a bit about, we talked about Bitcoin, Ethereum, Ripple, and we talked about the fact that people are not actually using these products, which is a big shame. A lot of people rave about them. They write blog posts about them. They have tens of thousands, if not 100,000s of Twitter followers, but nobody's actually trading this stuff that everybody's preaching. They actually are not using this stuff. They're just buying the coin, hoping that the next man is going to be buying. Now, if you want to know if people are going to be buying and selling, that's when you use your technical analysis, and that's why this pattern works really, really well, if you know what you're doing. In my case, I managed to produce some decent returns last year. In fact, they really helped me a lot. This year as well, I traded some on this push to the upside and managed to add profits as well. But since then, especially on the move to the downside, I've been very cautious and actually traded other things just because of lack of liquidity and the high costs of actually shorting Bitcoin or trading any sort of market on margin. Now, again, the levels are what they are. Let's see what happens. Bitcoin Cash, Ripple, Ethereum. I shared with you all the levels you need to watch to sort of get an idea of where the market trend could end, the downtrend. And of course, if they don't end, I think that would potentially push Bitcoin to the downside. On the other hand, if they do end, and this moves higher here, then a break to the September high could potentially lift Bitcoin to 8,536. And that, guys, concludes our update. Don't forget to retweet this video, and don't forget to, again, continue to be subscribed to Trade Captain and to via Twitter and to YouTube for more updates like this. And again, sorry about the issues with the sound. Have a great weekend, guys, and I hope to see you guys on the Trade Captain website for our daily morning update at 9 a.m. London time here at tradecaptain.com and the live trading room. Thank you.